For some days' market movements and investment strategy, Marcus Bogdan joining us from Blackmore Capital. Marcus, good morning to you. So, taking a look at the local market just more broadly at the moment, what's your reading of where it's at, where it's going?
Well, I think a barbell approach to the market is absolutely warranted. A stance towards leading defensive companies, given what we're seeing in terms of the uncertainty around lockdowns, around the Delta variant. So those COVID winners in terms of those defensive industrials, Amcor, Brambles, those consumer staples, Wesfarmers and Woolworths and Endeavour, and then in healthcare, those companies such as Sonic and Helios, which are benefiting from COVID testing. So that's definitely an important cornerstone, I think, in the portfolio at the moment. And the second area is that, Australia has done very well coming out of the lockdowns. Government support is there. Interest rates are low. And so the other side of the coin is having exposure to those reopening plays, particularly in energy, Ampol and Santos, some good industrials and some of those healthcares which have been affected by the lockdowns.
Yeah, so this goes to your barbell thesis then at the moment, but is it a bit trickier at the moment given what's going on, particularly in Sydney and obviously the effect that has across the nation as far as economic growth going forward, because there is some deal of uncertainty for the next 6 months?
Absolutely, and we don't know exactly what the pathway will look at, but we can look at the evidence of what we've done so far and how we've recovered out of Victoria, and also I guess the composition of the actual ASX 200. I mean, the miners in particular have sort of been unaffected by the lockdowns, given the strength of international pricing there. So I do think, you do need to be conscious of the risks, and that's why we have that stance in those more conservative companies. But also, given that we will be vaccinated and we will come out of this, and so we do want to have those other types of companies which will be beneficiaries of that.
Marcus, let's talk about the miners. Of course, we've just had Rio with its results. No surprise there, just the benefit it's had off the back of iron ore, given those prices and demand. Fortescue giving a production update there. What's your view? I know you hold BHP, but what's your view of the mining space at the moment, particularly, I guess, given future demand for iron ore?
Well, that iron ore price has certainly been stronger for longer, and it is so far ahead of what the Treasury estimates were of around $55 and still north of 200. There has been some tapering of consensus forecasts around iron ore, coming back to more levels around $150 and $160. But even at those sorts of levels, the cash generation that we're seeing from all of those miners, whether it's BHP, Rio, or Fortescue, is still extraordinary cash generation, very, very strong balance sheets. But you are seeing, particularly in Rio, issues around production levels. You are starting to see costs there. But given the discipline that we're seeing around capital, the outlook for those key commodity players in Australia still looks encouraging, and hence why we still maintain an overweight position in BHP.
Okay, but BHP and not the others, you're just saying it has that advantage?
Primarily because we do like to have a diversified portfolio. I mean, iron ore has obviously been such a strong driver of earnings, particularly in something like Rio. I mean, plus 70% of their revenue base. We prefer it over Fortescue, just given in terms of the quality of the iron ore at BHP. And we do want to have some exposure to copper and also into the energy space, given the heightened levels that we're seeing for petroleum prices at the moment as well.
Yeah, just on the oil price then, I mean, this is obviously an issue just as far as global demand is concerned going forward, which is looking pretty good, particularly also we're seeing some evidence of falling inventories there.
Yeah, we do like in the energy space, we get exposure there through BHP, but we also like Ampol as a refiner and also Santos. And we do expect that demand will stay elevated, and there has been very good discipline around the supply side. And so that dynamic, we suggest, will lead to continued good, strong prices for energy, and that we want to be exposed through those market leaders of particularly BHP, Santos and Ampol.
Marcus, great to get your view. Thanks for joining us from Blackmore Capital. Have a great day.
Thanks very much, Andrew.